Okay, good evening, everybody. Welcome. It's class number 3 of the 10-week Accounting 203 experience. I am speaking live. This is Professor Hassey, live and in color from Claremont, California, Accounting Central. And if I could label this class tonight, I would label it the most important class of the summer term. By the end of tonight, if you still are having a problem doing a journal entry, posting to the general ledger, creating a trial balance, adjusting the accounts, preparing an adjusted trial balance, understanding what a financial statement is, and closing the books with a final post-closing trial balance. If this is still very up in the air with you by the end of class this evening, you need to talk to me and get some help. Because after this week, we'll be going over into new material next week in regards to retail accounting. So this is a very important week for all of you. I have posted quiz number 1 grades this afternoon to those students who have completed the quiz. I have not posted the solutions because we still have some students who have to post their work. As soon as they post their work, which will probably be tomorrow, I will post the solutions. But what you should be able to do is go to your grade center and download your work files and look at how I graded them and the notes I gave you in the grade center to explain your work. Some of us need to go over and review this material again. In order to survive this quiz number 2 this week and the midterm examination, which is coming up in a couple of weeks, you need to get the accounting cycle fully prepared and understood in order to proceed. Many of you and all of you will be signing up in a discussion forum in the next couple of days to speak to me directly, individually, for 5, 10, 15 minutes in the coming week. Some of you have already signed up. I do this with every online class. In the first few weeks of the term, I like each student to meet with me directly via Zoom to talk about the class, make sure they are comfortable with the format, understand the technology, and above all else, understand the material at this point of time. And if they don't understand it, then we need to give you some additional work or additional time with yours truly to get the material. So that's, as I said at the beginning of tonight, class number 3 is the most important class of the term. If you get it after this week, you won't have any problem the rest of the way. But if you don't get it at the end of the week or the end of tonight, you have some work to do to get up to speed quickly. And that's why I'm here. That's why I'm scheduling one-on-one interviews this next week to help you make sure you get this material. All right. Remember, we're recording in accounting language the business events of a company. It tells the management, it tells the employees, it tells the customers, it tells the investors, it tells the vendors what happened, what's going on with the company. Are they making money? What's their cash position? Do they have much revenues? Are they losing money? All of these are very important points that you need to master in order to move on in your business administration program. So that's why we need, if I need another week next week, if quiz 2 is doesn't look very good, I will slow down the class and just concentrate on the accounting cycle next week, and we'll postpone retail accounting for another week. One of the problems that I saw in the quiz number 1, there's a lot of us have a difficult time putting these answers in some type of format. And we'll be talking about that. You guys are putting too much pressure on yourself by posting 5, 6, 4 files of your work. You should do it all in one file or 2 files max. Have a spreadsheet file with multiple tabs for the answers. Have a Word doc file or have a PDF file. You guys like PDF. Most accounting class students don't use PDF very much. It's not very accessible, not very helpful. And some of you are making images and then pasting them into a PDF file, and that ain't gonna do, because quiz number 2 is entirely in spreadsheet format. You are required in quiz number 2 this next week to put it in a spreadsheet, be it Excel, be it Mac numbers, be it Google Docs. You can use Google Docs if some of you are familiar with that. All you have to do is, once you complete the file in Google Docs, is to save it as an Excel file. That's very easy to do. But everybody, and I mean everybody, will be doing quiz number 2 in a spreadsheet this week. No PDF, no Word doc, because there's no short answer, fill in the blank questions. It's all journal entries and financial statements. If you're scared about that, concerned about that, talk to me now. Talk to me this week. Talk to me this weekend. All right? That's important. If I don't hear from you, I assume you got it. So it's up to you. That's one of the difficulties of online education. If the student doesn't want to communicate with the professor, you're going to have some difficulties. So you got to remember that. There's nothing wrong with saying, Mr. Hassey, help. Nothing wrong with that at all. Matter of fact, it's expected by me for some of you, because you just aren't having no experience in this. That's okay. This is an intro to accounting class. And some of you, I can't strongly point out, try to make the class on Thursday evenings. Just watching the recording ain't gonna do it. You gotta sit there and look at the material, hear me explain it, and then ask a question in class. You can't ask me a question on a recording. A recording is there to refresh yourself with the material. All right? Okay. That's my tough guy lecture, part of the lecture this evening. And it's not really that tough. I am here to help you. Don't be afraid to ask me. I'm going to pick on Blanca Diaz this week. Asked me on multiple occasions, Professor Hassey, is this okay? What am I doing? How am I doing? Help me. There's nothing wrong with that. I encourage it. I don't have anything else to do during the day. I mean, really, I don't have much. Just don't infringe on me between 5:30 a.m. and 9 a.m. That's when I play golf. 5:30 to 9. And even if you infringe on me in a golf course, I'll answer the question. But the rest of the day, you can call on me. Just know that on Monday, Tuesday, and Wednesday evenings, I also teach a class from 6 to 8, 9 o'clock. So I'm kind of incognito during those time periods. But all the rest of the day, you can contact me, send me an email, post to the discussion forum, give me any information that you need help on. Okay? So let's move forward, because it looks like finally we have everybody here in class tonight at 6:15 p.m. Even though the class does start at 6 p.m. But now we have everybody here. So that's good. I'm happy.
Hey, sir.
Yes, sir.
This is Brian Rodriguez. Again, I spoke to you last week about my computer being broken. So this
Yes,
week
Brian.
my girlfriend's.
That's fine. You must be, what's your, Ashante Stewart.
Yes, sir. So my
That's good.
girlfriend.
No problem. I already knew that, so I appreciate you telling me. But Ashanti, nice to see you again. All right, so don't worry about that. That's fine.
Professor Hussey, you know,
Yes, ma'am.
I tried to contact you, and I was in an area that I couldn't get Wi-Fi, and so I kind of got you late. But you should have heard me screaming. I didn't know what I was doing.
Well, there's a good thing. Michelle, you have my telephone number in the syllabus. You can call me. Mr. Hassey, where in the hell are you? You're not on the internet. Where are you? You can call me. You can send me a text message. Mr. Hassey, Blanca does that. Mr. Hassey, get off the damn golf course. Come and help me. So Michelle, really, if you're panicking and you got a problem, first of all, Michelle, it's only accounting. Don't get everybody all wigged out over it. It's just accounting. Yes, you needed to get a degree. Yes, you needed to survive in the business world. Don't want to put any pressure on you on that one. But it's only accounting. Don't worry about it. We'll get you through this. Trust me. Remember, look at this shirt I have on. Pretty snazzy. I am the doctor. I will get you through this. Don't worry about it. So Michelle, I understand that. Don't get frustrated. We can meet at any time. You can send me hate mail and say, where the hell are you? I got a question. So please do that, Michelle, okay? And I also understand that some of you have Wi-Fi issues, your computer breaks, like Andrew said earlier. You have, Brian said earlier, excuse me. You have maybe workspace issues. You are under pressure from your job. You're under pressure from your. That's fine. Do not worry about that. You take care of those things first, and then you let the Hass man take care of you. All right, see me here? Come on at me. I've been in this business for 40 plus years. I've seen it all and then some. All right. So do not worry about that. So Michelle, we can talk about this in our one-on-one interview in the coming week, and I'm going to talk about that in just a minute. Or we can talk about it at the end of class tonight, whatever. So not to worry, I'm here for you, okay? We have a couple of chat questions. From Jessica. Lisa Barlow just told me that she's attending a graduation and cannot attend tonight. I am sure she will email you, but she wanted me to let ya know. Let ya know? All right, Jessica. Thank you for that information. If Lisa was really on top of things, she would have let me know earlier this afternoon and not depend on you to pass the information. But thank you anyway, and I appreciate it. She's not in trouble. All is well. And here's Janley's iPad. My apologize for being late. I got stuck on a work call, and that's okay. And you don't even have to tell me that. Work, family, the Game of Thrones, our top priority. Everything and then accounting. So you take care of that. And some of you still need to work on some of your virtual backgrounds. A little bit creepy, you know, some of these virtual backgrounds, but everything else is fine. Don't worry about it. Okay. All right. And that we had some students tonight who got some work issues, who had some time management problems. So I told them they could post their work tomorrow. And if any of you ever get in those situations, you can post the work the next day. Just let me know. Okay. That's not a big deal with me. I'd rather you do it right than get all wigged out and post some work. That's good, Blanca. Open that textbook up. Come on. You're going to need to open it up to page 140, 154 before it's over. 154, Blanca. All right. And you're not in bed tonight. That's another positive. So I'm really feeling this is going to be a good class.
Yeah.
All right. All right. So there's where we start. So let's take a look, first of all, at our Blackboard page. Bless you. And if you ever have a chance of signing on early before the 6 p.m. hour, you can listen to some very delightful music as selected by Professor Hasse. Mr. Diggins was a very early subscriber this evening, and he had a nice basic potpourri of Professor Hasse's music that he likes to hear. So it's not a bad deal. You can sit back there and listen to the music. Get you in what is called the accounting mood. No alcohol is not necessary for the accounting mood. Nice music is. Okay. Let me find my blackboard here. Ah, there it is. Okay.
Can I ask a question?
Please.
Why do you have the TV on in the background?
That, if any of you guys don't know me well enough yet, it's only the third week, but Professor Hasse has 2 channels on 24/7, CNBC and Bloomberg Television. Right now, I'm looking at the markets in Asia, looking at the stock markets and the economic markets in Asia and Australia. In about 3 hours, I begin to look at the markets in London and Europe. I wake up at 5:30 in the morning to the markets in America. I am a geek. I am strange. I am weird. But 24 hours a day, I have a business channel on because why? This is true. Why? Because I have investments and I monitor things and I represent interests that pay me to be on top of world events and economics. But also, and this is true, I prepare myself for the classes by knowing what's going on in the real world, not some flaky PhD professor who has no clue how to tie their shoes, let alone what's going on.
Good for you.
So that's why that's on, and it's on all the time. So would you like me to turn it off? Does it bother you in the background?
I was just curious. Thank you.
That's, yeah, okay. Here is your YouTube site. If you go again to the report card area, you now will see a grade there. If you've posted your work this week, that is your quiz number 1 grade. You will see a grade there. All right. Which, if you punch up that grade or go to your grade center, you can see your file folder that I have uploaded and given you your results. You can download that file folder back to your computer and see my notes and see the grading of your work. Also, if I so desired, I didn't do it for everybody, I put a little note in the grade center to explain to you some of your grade and some of your work. If you got 100, you did not get your file back. Why should I return a perfect work? All right. But if you got less than 100, I returned your work to you. Okay. Some of you, I said, maybe you want to review the solutions. I am not going over quiz number 1 this evening. Why? Because we still have students yet to post, and it wouldn't be fair to you guys to tell some students and go over the quiz before they finished it. Not very kosher. All right. But I am going over some review points of the first couple of chapters, mainly chapter 2 and 3, to go over tonight at my beginning of the lecture. All right. So you have your grades. Isn't that exciting? A professor that gives you your grade within 24 hours. I give a toast to me. Thank you. No big deal. Okay. We're centering on week 3 tonight. Completing the accounting cycle. I've sent you an introduction video a couple days ago, getting you ready. The agenda we've already seen, and there it is right there. Maybe perhaps you've looked at some of these videos. We're completing the accounting cycle. Here's the accounting cycle again. And this is what I said earlier. By the end of class tonight, you should be pretty well familiar with all these 9 steps of the accounting cycle. Steps 1, 2, and 3 were quiz number 1. Steps 4, 5, 6, 7, and 8 are quiz number 2. The midterm examination in a couple weeks is all 9 together. So even though you might have been a little disappointed in quiz number 1, it only takes about 5% of your course grade, and it's practice. It's to see what you need to work on. It's to help you with the definitions, to help you with the language. Don't get all wigged out if you got a 73 or a 75 or something on the quiz. It means you just got to work a little harder. That's all. Doesn't mean anything else. It's practice. How would you like to walk in cold to a midterm examination and not practice anything before that? That's pressure. We don't do that here. We want you to learn and take baby steps to learn this material. All right? Okay. Let's put that away for now. I mentioned earlier, oh, look at all the people that have signed up in the last hour or so. I guess I got to do some homework to post all these. Again, as I said earlier, and I find that students appreciate this, not so much that I'm there, but because they have a one-on-one with their instructor to talk about the class, give some frustrations, give some concerns, or whatever. And we're going to be doing this. And what I need you to do, and some of you have done, and some of you have already done before class today, is pick one of these dates and times. You post to this file folder, Mr. Hassey, like Maribel did. I'd like 1 o'clock on June 29th. Okay, Maribel, if you need to get an answer back from me. And I said, okay, Maribel. And then you can go back to the discussion board and you see your name right there. Belanca is at 1:20 on Monday. Aubrey is at 1 o'clock on Tuesday. And now some other people have yet to have already posted, but I haven't posted them. I'll do that after class tonight. And then what you do is you'll click on this link with the password. The link will also be in the Zoom links file folder. And then at your appropriate time, you and I will have a little chat for 10 or 15 minutes. Talk about the course, talk about whatever you want to talk about. All right? Hopefully it's be accounting. But whatever you want to do, I want you to give some feedback, or I want feedback from you in these early weeks, making sure you're comfortable with the course. Yes, I know the material is hard for some of us and difficult, but having comfort with the course, having comfort with the way I present things, having comfort with me makes a big difference in your ability to learn online, just like in the classroom. Feel comfortable with the professor. Feel comfortable in how he or she is presenting the material. And if you have a difficulty with that, hey guys, I've been around the block. You can say, Professor Hassey, you suck. You got to clean up your act. You can do that. Then I'll put a little check mark next to your name and say, that person is in big trouble. No, I don't do that. I don't do that. No. Okay. So all of you, when the next couple of days, I need you to pick a time, Saturday, Monday, or Tuesday of this weekend or next week, when you and I are all going to have a little chat individually. You do this, you get 100, which represents 5% of your course grade. This is class participation. If you blow this off, you don't get 100, you get a 0. That doesn't bode well to your grade point average. So this is for a grade, taking the time. Now, if any of these times can do, you let me know and we'll work around the schedule. But I think these pretty well take into the area of when, like a weekend or the weekday. I know your work schedule. I don't know all your work schedules, but if none of these times or days fit, you just let me know. Just don't say, oh, it don't fit, so I'm not going to answer Mr. Hassey. Then you'll get a 0. All right. This is part of being an online student. Interactive. Okay. Interaction with me. So that's what we're doing. Okay. So 12 of us, so I'll after class tonight, I'll update the schedule with everybody who's signed on. And now with 12, that means I have, that's 13, 14, 15. I only have 3 students left who haven't signed up.
It's not 12 responses from people.
I'm sorry?
It's not 12 people. It looks like it's counting responses.
Yeah, 6 of those are mine.
Blanca, what the hell you doing? Writing me a book?
Well, we were going back and forth. Remember, I was overlapping over somebody.
Okay. All right. Okay,
Schedule
there
it.
they are there. So 1, 2, 3, 4. Oh, you guys already said something. All right, so 2. Oh, okay. So we got some of you still have to do this. That's okay. I shouldn't be showing you guys this, I guess. All right, so, okay. So do that in the next 48 hours or by next Monday. You can blow off Saturday, but I need to speak to everybody by the next class if we can do that. And I hope you understand why we're doing this. It's make you
Mhm.
feel comfortable one-on-one, and it'll help. It will help. Even if you got 100 on the first quiz and you know what's going on, it still helps to speak to me and work that out. Again, if you go to the quiz and examination section, as soon as they get everybody posted their work, there will be a solution file here that you can download and review. This will be very helpful as a review for the midterm examination, okay? At the 7 o'clock hour tonight, quiz number 2 will be posted to this file folder by my assistant. I don't have an assistant. Be automatically posted, and we'll talk about quiz number 2 in the second half of our class this evening. All right. So let's get to work. Created this spreadsheet for us as a review, as a lecture point for this evening. And you guys see it? Michelle, you see the spreadsheet in front of you? Okay. And this is a little bit of highlight of where we've been, where we're going, and the points that you need to concentrate on in this process of understanding the language of accounting and the accounting cycle. Quiz number 1 concentrated on journal entries. Now, for some of us, a journal entry is not the accounting equation with the accounts listed underneath them. That was just a way of learning about the accounts and the accounting equation as a teaching tool. But that is not a representation of journal entries. A representation of journal entries is to have a debit column and a credit column, and you have an entry. I sold $1,000 of product and I received cash. Cash is debited $1,000. Revenue is credited $1,000. That is a journal entry. Okay, that's a journal entry. One after another, every transaction. Now, Mr. Hassey, how do I know which accounts to use? They're given in every problem. I list all the accounts, revenue, fees earned, accounts payable, whatever it is, you see the accounts. Your job as the accountant is to understand the transaction to know which account to use. That's a journal entry. So do not put things by the accounting equation and then list them. That was just a teaching tool. A journal entry looks exactly like this. The debits are on top, the credits are below. Debits increase assets, decrease liabilities and equity. Credits decrease assets and increase liabilities and equity. That's why expenses are always debited and revenues are always credited. Expenses reduce equity, revenue increases equity. That's why withdrawals is always debited. Owner withdrawals, it's money going out of the account. All right, that's a journal entry. The general ledger looks like this. It's a T account. It's a T account, simply. And let's say this is the general ledger for cash. The T account has a debit or left-hand side, and the T account has a credit for the right-hand side. And if I would post this journal to the ledger, I would just put $1,000 right here. And I have now posted that journal entry to the cash ledger account. And then I would have another account for revenue. Call it revenue. And the revenue would have a left-hand side debit and a right-hand side credit. And now I would post that account to the journal to the general ledger, and I would put that one over here. That's the general ledger. Count after count after count. Cash, for every entry you have here with every account, you should have a ledger account set up. You can do it very simply in a spreadsheet. See how quickly I did that? By just using underlines. And you don't even have to put in the underlines. Just put the name of the account, debit and credit, and list them underneath it. I don't get too technical about that. But it's a ledger of all the activity by account of the journals.
Excuse me, Mr. Hassey.
Yes, Cynthia.
For the T account, then also you have to add the balance at the end?
Yes, you do.
Okay.
That would be very helpful, yes. Very good, thanks, Cynthia.
Thank you.
Journal entry, ledger, and then the trial balance is a listing of all the balances in the general ledger. The account, debit balance, credit balance. So right now, my trial balance would be, the account would be cash, and I have $1,000 cash balance, and it would be revenue. I'm keeping this kind of simple, but you know from quiz number 1 what that means. I would have a credit balance over, so my trial balance is equal. Totals 1,000 versus debits, 1,000 credits. That's my trial balance. It summarizes the balances in the ledger to make sure everything balances. Okay?
Don't you need the date on the trial balance as well?
Yes, that would be advisable for the period ending, yes.
Well, on everything, right? Yeah.
Yeah. Mr. Hassey, you make this look too easy. When you do this, it makes it so easy. I was going crazy over this stuff.
Wait, I've got a quick question, sir. So the difference between those two, the general entries and the post ledger, is just like the general entries is one sheet, and then the general ledger is 2 different ones, right?
The
So
general ledger is a listing of every account with a debit and credit. Okay, so here's a ledger of cash. Here's the ledger for revenue. Okay, it's summarizing all the journal entries. If I kept doing more journal entries like you did in quiz number 1, you would post every journal entry to all the accounts, and something naturally like cash would have multiple postings to it, right? Because you use cash a lot.
right.
So the ledger is a record of each individual account. And then at the end of the process, like the end of the
Okay.
month,
Yeah.
you get the account balance, and you put the account balance in the trial balance to summarize all the activity.
Oh, I see. Okay.
Chapter 2.
Professor Hassey, is there anywhere I can find, even if I have to Google it, or if you can provide to me, as if you may remember, our conversation is identifying what's under revenue, what's under assets, what's defined to be such.
Well, the textbook gives you very nice examples of listing all the different types of accounts by asset, liability, and equity. Yes, the textbook has that information. And if you so desire, I can list all that to you now. But every problem is different because every company has different accounts. Your job is just to say, okay, accounts receivable. Your knowledge of that is people owe me money. I know, Blanca, this was a problem for you.
Yeah.
People owe me money. If people owe me money, that means it's an asset. It's owed me. If accounts payable, I owe somebody money. That's a liability. Revenue. What type of revenues are there? Sales, fees earned, revenue, other income. It's just practice to understand the language of the account
Yeah.
and figure out where it's going. It just takes practice, Blanca. And that's why after 1 or 2 weeks, it's difficult. You're still getting the hang of it. That's why, but after tonight, after more practice and more understanding of it, it might sink in a little bit more. It's just repetitiveness. Okay?
Okay. All
So
right.
you're doing fine. You're doing fine.
Professor Hesse, I
Yes,
think
Michelle.
I made my mistake, well, placing, for example, the equipment. That, okay, we bought equipment that was on the cash, and I forgot, but then it was a credit. It,
Well, I can't go over the specifics of this, Michelle, because some students are listening in who have yet to post their work. Okay? Okay? But equipment is an asset.
right.
We own it. Okay? So if we purchase equipment, that means we're increasing our assets by owning that equipment. So it's got to be a debit. Remember, debits increase assets.
Okay.
Okay? Now, how did we pay for that equipment? Did we
It
pay
was
it
on
with
credit.
cash? And did we pay with cash or did we put it on account? We'll owe the money. That determines the credit, right? It's again, Michelle, just like Blanca. It's just you just got to practice it over and over and get used to the feel of it. Okay, and again, it's just like learning a language.
But if you don't place it in the right place, when you come to the end to add everything up, it's
Yep,
not going to balance out. And
that's right. Welcome to the perils of being an accountant.
that's where I threw my hand up.
Okay. Well, here's the thing, and that Michelle, you bring up a very good point, and all of you should listen to this. Let's say this entry up here, and this was a quiz, and the correct entry is debit cash, credit revenue. But let's say I put in debit revenue, okay, and credit cash. All right. Let's say I make the mistake there. All right. Well, if you would post this to the ledger and then put in your trial balance, you still will be balancing, but it's going to be incorrect. Okay, or
Right.
it's going to show up in the revenues as incorrect because your revenues are going to be off. Okay, so here's how I grade. If you get this wrong, you lose a couple of points here. But if you track that through your ledger and the system to the trial balance, you won't get any more wrong. You just get it wrong once because you made the original entry wrong. It doesn't, I don't keep taking points away from you for the same mistake in these other areas like the ledger and the trial balance, okay? So it's not a multiple getting it off, so don't worry about that. I take that in accounting into account when I grade you. I only hit you once for the error. It doesn't track through. Okay, if you track it through the rest of the way, then you did it correctly. You just had the original entry incorrect. Okay, so just so you know that. All right. Now here's another helpful hint, Michelle. If you out of balance, if you go ahead and get your trial balance and it's not equaling, all right. First of all, take the difference between the two, the debit total and the credit total. Take the difference between the two. And take that difference and go back through and look at your transactions. And you might be able to see, oh, I did that wrong. This should be cash and this should be revenue or whatever. You just go back through and look for a number that resembles that in your transaction. Now, this is going to be a little bit more complicated if you had multiple errors, okay? But that's one of the ways, guys, I'm always incorrect in my trial balance because I go through and I don't pay attention what I'm posting and doing, and I'm off. The first thing I do is I see what's the difference in that trial balance. Oh, $400. I remember that transaction over here. I did that wrong. I go and I can quickly see it. So that's one way of kind of sorting that out. But also, Michelle and everybody, if you're off in the trial balance, don't beat yourself up. Okay, if you can't find the reason why you're off, just continue on with the problem the way it is. Because you're only going to get marked off, if you have the original entry incorrect. So don't say, oh, it doesn't balance, so the hell with this. I'm not going to forget it. Don't. Keep going on. Okay? Okay. All right. Good question, Michelle, and thank you.
Thank you.
All right, this is quiz number 1, and this is where I'm going to stop with the quiz number 1 stuff. You had to do a journal entry for those transactions. You had to post them to a ledger. You had to record the trial balance. Everybody else did very well on the other 3 questions. Matching up the financial statements with the saying, figuring out the equity of that company, matching the definition to that last question, question 4. Everybody did very good on that. Just a couple of points off for some of us. Everybody did very well. It's the concept of actually doing the physical accounting work that some of us still have to work on. And you should concentrate on understanding these 3 things right off the bat when you see your work and see it being returned to you in quiz 1. Why were my journal entries like this? And if they were, how did I make that entry wrong? You can go through the solutions that I give you and track that. That's part of your study. If this was a class, if I was in front of you at the Vandenberg or up in Paso Robles or whatever, if I was in front of you, I would be putting these solutions on the board and we would be going over it. Here, you have to download those solutions and then go through it yourself to see where you made a mistake. And if you notice when I return the files to you, I highlight in yellow the areas that you missed. So you can find those yellow highlights on your work and then return to the solutions and see what's up. Because by doing that process, you're doing repetition. You're now seeing, oh, okay, now I see what I did. And that helps you learn. It just takes a little bit more work. That's all. Okay? Whew. People do this for a living.
Mr. Hassey, I have a quick question. I was reviewing the quiz and I saw that you highlighted
Who
something.
is this, by the way, please?
Oh, sorry, it's Janelli.
Hi, Janelli.
Hi. I saw that you highlighted some areas on the trial balance, but not on the ledger on the T account.
Yeah.
So I guess I'll just wait for you to post. Maybe I'll just do that. I'll just wait.
Yeah, it'll make sense when you see the solutions.
Oh, okay. Okay.
Okay.
I'll just do that then.
And then here's the process, Janelli. If you look at the solutions and see my highlights or see my notes on your work or see my notes in the grade center, and it still doesn't, I don't know what he's talking about here. That's when you talk to me. That's when you send me an email. That's when you send me a note or contact me, and then we can go over it and I can explain it to you, okay? And maybe in our interviews, in our meeting sessions in the next few days, you all have a little list of things you want to review with Professor Hassey. Well, it was this one problem on the quiz. I didn't know what the hell he was talking about. Okay, and we can review that in our meetings in the next few days. Fair enough? That'd be
Yes.
a good time to. That'd be a good time to do that, Mr. Hassey. I know why I got it wrong, but can you explain to me how did I really do it, or what was going on in it, and why did you take those amount of points off? Okay, and then that would be a good time to go over that. But if you want a quicker answer, you can do that before your meeting, and we can get that out of the way via email or any other platform you wish. Okay, good question. Thank you. Okay. Now let's talk about tonight, June 25th, 2020, a day that will live in your minds as the day I finally understood accounting.
Wow. That's deep.
Exactly. It's almost spiritual. It's almost a revelation. The day that the clouds broke in Lompoc and I see debits and credits in the sky. The day that salvation is here, I get it. Let's say a little prayer and make sure we get that. No, I'm teasing. Okay. Adjusting journal entries. Adjusted trial balance. Financial statements. Closing journal entries. Post-closing trial balance. Okay. These are all quiz number 2 practice. One problem is doing this. One problem is doing this. 2 problems. Okay?
2 problems?
One problem doing this.
Good.
One problem doing this. Okay?
I like.
All right? Not one big, huge problem to give you an ulcer. 2 different steps. All right? Remember, an adjusting entry is an entry that you do to adjust with something happening at the end of the month. An accrual, recording of depreciation, unearned revenue. Something has changed the inventory of supplies. Just like it said in that video I gave you in the introduction. Something has happened to necessitate a change, and you adjust your accounts. When you adjust the accounts, you have new balances, so you have to do a new trial balance. And then you use that trial balance to put information into the income statement, into the statement of owner's equity, and the balance sheet. All right. Then you take these specific accounts that are now all completed and balanced, and you put them in the appropriate statement. Remember, an income statement is for a period of time. Statement of owner's equity is for a period of time. A balance sheet is on a specific date. Period of time, 1 year. January 1 to December 31st. Here's my income statement. My statement of revenues and expenses. Nothing else. No cash, no payables, no receivables, no withdrawals, no capital, just revenues and expenses that you get from your trial balance. The statement of owner's equity is a statement of the equity position of the company. Beginning balance, new money coming in, profits, revenue, expenses, owner withdrawals. You did that in question 2, and all of you did it very well. And the balance sheet is on December 31st. How many assets do we have? How many liabilities do we have? And what's our equity position, which you just determined in the statement of owner's equity? And the assets should equal the liabilities plus the equity. Okay, that's one question on quiz number 2. The second question on quiz number 2 is I give you the adjusted trial balance, this information here, and your job is to do the closing journal entries. Do the closing journal entries, and we'll talk about that in just a few minutes. You do them. And then once you close the entries, then whatever accounts that remain in your trial balance after you've closed them, you put together in the post-closing trial balance. And the only accounts you shall see in the post-closing trial balance are assets. Oops, assets, that's right. Assets, liabilities, and equity. And what are those accounts? Cash, accounts receivable, supplies, equipment. Those are the typical accounts that go into the next accounting cycle. Liabilities, accounts payable, unearned revenue. And equity should just be the capital account balance. Notice I see no revenues, no expenses, no withdrawals. All of those have been summarized in your closing entries in this capital account. And now you can begin January 1 of the next fiscal year with all your accounts moving forward into the next accounting cycle. That is the second question on quiz number 2. Quiz number 1, quiz number 2, part 1, quiz number 2, part 2. Okay. All right, I think we need a little break to sop all this stuff up. Take a little break. Maybe go out and have a cigarette. Even though I don't advocate smoking, I've never smoked a cigarette in my life. Some of us need it after a tough hour of accounting. Get a drink of water. Maybe say hi to your dog. Maybe tell your husband to make friggin' dinner.
Yeah.
Whatever. Whatever. So let's take a little break. Guys, I'm going to save this and post it to Blackboard after class, so you have this. Then there's going to be another tab on this for our work that we're going to do, practicing these things in just a few minutes, okay?
Could you save the actual Excel?
Yes, the whole file, you mean?
Yeah, the whole
Yes,
file.
yeah.
Oh, I can make extra notes in it.
I will.
Hey, sir, I got a quick question too. This is Brian. Do you by any chance have like templates of like journal entries and journal ledgers?
Well, if you remember from our last class, we did those problems in class and I gave you the solutions.
Mm,
And also when you see the solution file that you see for quiz number 1 will be in Excel format. There's going to be a nice little template with that when you download that.
okay, thank you.
Okay? Okay, good question. Thank you, Brian. That's good. See, this is good. You ask questions. I know some of you, before you unmute that microphone, you go, well, I look like an idiot if I ask this question. No, you will not. Ask it, please. Because those are all good. Every question tonight has been excellent. It helps also your fellow classmates.
Mhm.
Because,
Yes.
so please.
Professor Hassan,
Michelle.
some are also not really familiar with Excel and navigating through Excel. I
Okay.
actually had to do a one-on-one through Google to navigate through Excel, and that's kind of hard.
Well, Michelle, don't sell yourself too short. All you have to do is exactly what I did here tonight. You just open up a blank spreadsheet and create columns, right? You just type in the columns, right? All you have to do is type. And then you can just type. You're not doing any calculations. All you're doing is setting up columns in cells to give me your information of the transaction. That's all you're doing. You don't have to worry about lines and pretty little pictures. All you're doing is typing on a sheet of paper, and the sheet of paper is digital. So don't sell yourself too short. You can do that. You just bring up. Now, do you have access to a spreadsheet? Like a blank one?
Yes.
Okay. Because if you don't, I will send you those spreadsheets. All right? And there also will be in Blackboard. But Michelle, all it is like I just did. I typed in debit here. I typed in credit here. I typed in cash. I put the $1,000 in that appropriate thing. So what a lot of students do, Michelle, and again, this is a great question, is if you can see me on the screen here, is you have maybe a sheet of paper with like a ledger pad or just a blank sheet of paper, and you write these out, making sure, okay, I got this, and then you put them into your spreadsheet if you want to do it that way. Now that takes a little bit more time, but if you feel better about writing it out and by hand and then saying, okay, I got it, cash, revenue, 1,000, then you just take that little written notes that you made yourself and just type it into the appropriate columns. That's all you have to do. There's no formulas, no nothing. The only time you're going to use formulas, and you can also just do this in your head or with a calculator, is when you do the income statement and you're totaling numbers, or you're doing the trial balance and you're totaling numbers. But when you see the solution file for the trial balance, you'll see a formula of how I calculated the sum of each one of those columns. You'll see that in a template. That can be your template of how to do that. But Michelle, I can't stress enough that it's going to help you immensely in the future of your academic and professional career is to have this skill. Trust me, it's a good skill to have. And I'm going to be a pain in the neck on insisting on it. And I am this week by making sure you all do a spreadsheet. But all you have to do, Michelle, say, Professor Hassey, can we have like an hour on Saturday or Sunday and we can go over this stuff, you and I? And I'll say, Michelle, you name the time and the place, I'll bring the beer.
Okay, because
Okay?
I do want to understand, and
I respect that, and that's why I'll be here if you need it. Okay?
thank you.
Okay, good. All right. Let's take a break. Let's end on that high note. So let's take a break. I'll see you guys back at 10 minutes of anywhere between 7:10 and 7:15. I'll see you then. Okay? Adios. Get out. Leave. Bye. Okay. I want you all to turn, if you have your textbook, to page 154 of your textbook. Page 154. Problem set A, problem 4-1. Problem set A, 4-1. We are going to do this whole problem right now, from beginning to end. We're going to put it in a spreadsheet format, and we're going to walk through this so everybody can see the transactions. Aubrey, you with me? Quit giggling, because I'm going to call on you first for the first journal entry, Aubrey. Be ready. Then I'm going to call on Jessica. And then I'm going to call on Blanca for journal entry number 2. Now, if any of you are concerned, the answers to this problem is in Blackboard. But we're going to walk through this from beginning journal entries to ledger, to trial balance, to adjustments, to adjusted trial balance, to financial statements, to closing. The whole kit and caboodle. This will be your template, sports fans. So if you're on page 154 of your textbook, you will see on April 1st, Jerome Nozami created a travel agency, Adventure Travel. The following transactions occurred during the company's first month. All right, so we're going to set this up for Adventure Travel. So Aubrey, I'd like you to handle or do the transaction for April 1st. But before we get to there, Aubrey, if you notice, the company's chart of accounts are given to you. All the accounts that you will need to do this problem. As we've indicated in prior classes, do not worry about the count number. But those are all the possible accounts. You cannot create one on your own. You have to use one from this list. So Miss Aubrey, on April 1st, Nozomi invested $30,000 cash and computer equipment worth $20,000 in the company. The company, Nozomi, invested $30,000 cash and $20,000 of computer equipment in the company. Aubrey, could you give me the journal entry on April 1st for that company?
I can try.
Good.
Okay, so the journal entry would be cash.
I just missed.
That's not me.
Stupid.
Cynthia, you've got your mic on.
Sorry.
So
I'm
the
just having
entry,
issues here with my computer. I don't know what's going on.
Okay. So the journal entry would be April 1st. Owner investment,
Why don't you start with the debits first?
debits. Okay. Debit would be 30,000 cash. No. Would be, okay. I don't have well, I have got this in front of me, but my book is on this computer, so I can't refer to it.
Okay.
But would Nuzami, so would it be owner investment 30,000 plus 30,000 in debit?
No,
I got it flipped over.
you do.
So, okay, because it's cash in credit, correct?
No, you're not spending
Okay.
cash, you're receiving it.
Okay. So then, computer equipment being 20,000 would be a plus.
A debit, not a plus.
Okay.
There it is right there. Okay. So where the owner is investing $30,000 cash and $20,000 of computer equipment in the company. So that means the owner is putting in a credit to capital of $50,000. 30,000 is a debit, 20,000 computer equipment. So then I would post that to the general ledger. On April 1, debit 30,000 in cash. On April 1, 20,000 debit to equipment. And on April 1, $50,000 credit to capital. I have just done the first transaction of this business in a journal entry format here. And now I have created general ledger accounts for cash, computer equipment, nice spelling, computer equipment, and capital. And now I have posted those debits and credit to the appropriate account.
Okay.
Everybody okay with that?
Yep.
Quick question. This is Janelli again. Capital wouldn't be considered owner's investment though, right?
Yes, it is. It's the same thing.
Okay.
And
If you look at the chart of accounts for the company, it's J Nozomi Capital. That's owner investment.
I see. Okay.
And even though it's like cash and computer equipment, it can be combined into one thing?
Yes, it can.
Okay.
Yes, it can. Makes it a lot easier. Very good. Let's go to April 2nd. Jessica, can you do the April 2nd transaction? Now, if you don't have your book or it's on your computer, just let me know. That's no big deal. But the transaction reads, the company rented furnished office space by paying $1,800 cash for the first month's April rent. Jessica?
Would cash come before rent expense?
No, you put the debits on the top.
Okay, so maybe cash 1,800.
Debit or credit?
Sorry, let me read again. Credit.
Okay, so we will put that down here. Cash, credit, 1,800. What would be the debit?
Rent expense 1,800.
Very good. $1,800. Very good. So now we'll post this to the ledger. 1,800 now will go on the credit side of cash. And we would create a new account in our ledger and call it rent expense. This would be for April 2nd. And it would have a debit of $1,800. So now I've recorded the entry. Here's the journal, and then I've posted to the appropriate ledger account. Cool. Good job, Jessica. Good job, Aubrey. Let's do April 3rd. Blanca Diaz, talk to me.
Okay, so the company purchased $1,000 of, I'm sorry, April 3rd, right?
Mm-hmm.
Purchase $1,000 of office supplies for cash.
Mm-hmm.
So that would be office supplies, $1,000 under debit. And then cash, $1,000 under credit.
Excellent. Very good, Blanca. And now I'll post that to the ledger on the credit side, and I will create a new account, an asset account. And call that supplies.
Are we working any section of quiz 2 right now?
No, this is quiz 1.
Okay.
Quiz 2 will be in the 8 o'clock hour. We're going late tonight. And supplies as a debit of $1,000. So now notice the ledger is expanding. Notice how I'm setting this up though, and it doesn't have to be this way, but I'm putting all asset accounts here. I'm putting equity accounts here. I'm keeping them in their own little environment. Notice how I'm doing this.
You mind putting that on top?
I beg your pardon?
Do you mind putting the header on top? What you just
What
said?
header?
A header like, what did you say? Equity accounts and.
No, I don't need to do that.
I see now following
I
now.
know, because I know cash and equipment and supplies are all assets. And
But I
you'll
don't-
see, I'm sorry, you don't?
Well, my brain doesn't know that right now. I'm
Well,
following.
All right, I'll put that there. Okay.
Just trying to follow.
All right. So
I'm trying to accumulate all my brain cells, trying to figure it out.
assets, equity.
Equity.
How's that sound?
Perfect. Thank you.
High maintenance accountant. High maintenance accountant. Okay. All right. April 10th now. Elijah, let's see if you can do April 10th. It says the company paid this is a good one. The company paid $2,400 cash for the premium on a 12-month insurance policy. The coverage begins April 11th. The company paid $2,400 cash for the premium on a 12-month insurance policy on April 10th. Elijah, can you maybe try this?
Yeah, did you pay in cash?
I just said the company paid $2,400 cash.
So it would be $2,400 cash on credit.
Prepaid.
Excuse me, is your name Elijah?
And then I'm not sure what you would do on the debit side. Would you put $2,400 on for like, I guess like prepaid expenses?
Prepaid insurance. It says, you see the account right there in the chart of accounts.
Yeah.
Prepaid insurance. Very good, Elijah. So we would debit prepaid insurance because we're paying in advance for a service that's going to be provided us. I smell an adjusting entry down the road. And there it is right there. Prepaid insurance debit, credit cash. So let's post that to the general ledger. I know this is not the most exciting stuff, but by walking through it, I know will help some of you. And now we're going to create another asset account here called prepaid insurance. For April 10th. And put the debit as $2,400. This is a good thing to see this because notice it's good for your discipline is after every journal, I go in and post it to the ledger. Don't do all the journals and then go back and set this up because you're going to sometimes make a mistake. You're going to make a mistake in putting in the wrong column, or you're going to make a little mistake because you'll lose the discipline, you lose the engagement. So notice after every transaction, I go ahead and I post it to the ledger. And so when I get done with the journals, I'm done with the ledger. Cool.
Mr. Hussey,
Yes.
I just have a question. So every time that you give cash out, like you're paying in cash or whatever, that's gonna be posted as a credit?
Correct.
Okay, because I just got confused when I saw, like for example, office supplies. Well, that's something that now it's mine, right? I'm owning that.
Yeah, but you're exchanging cash for the ownership of the supplies.
Gotcha. So is that the same thing with the rent expense? Like even though, because rent expense to me, I was looking at it as a credit for some reason.
Well, remember, remember we've talked about this. Revenue is always credited. Expenses are always debited.
Gotcha. Okay.
Okay. Well, Cynthia, while I have you here, why don't you do April 14th? All right. Why don't you do April 14th, where it says the company paid $1,600 cash for 2 weeks' salaries earned by the employees. Oh
my goodness.
It's payday. It's payday. By the way, tomorrow is University of Laverne payday. I'm gonna get my $75 check for 2 weeks of teaching this course. Tomorrow is Laverne's payday. They're going to debit and credit. So Cynthia, what is the transaction there for April 14th?
All right. So I believe that so we would put April 14 would be cash. The 1,600 would be on credit.
Okay.
And then so salary expense would be on debit.
The what? Salary expense would be debit. Very good.
Okay.
Salary expense.
I get it now. Okay.
See, as I said earlier at the beginning of class, the clouds are opening up. Debits and credits. I see the light. Bless all. Okay, good, Cynthia. All right.
Thank
So
you.
there's the 1,600. Okay, so let's not forget. Let's post that to the ledger.
Okay.
So April 14th, we post the credit to cash.
Okay, credit.
Looks like we're spending a lot of that cash. And now we got to create another general ledger expense account here. And we'll call it salary expense. Very good. You see, once you get the hang of this, it's not that really difficult. It's just getting the hang of the way we do it. And that's just practice. And we put his $1,600 here. See? So our ledger is beginning to take shape. How exciting.
I have a quick question on like difference between something like a salary expense versus like accounts payable.
Well, accounts payable means there's no cash going on there. If you buy something or pay somebody and you say, "Oh, I'll pay you cash next week," that's why it's a payable credit instead of cash credit, because you owe the money. Make sense?
So if I bought like office supplies on credit, then that would be like
credit accounts payable.
Okay.
All right. Okay, let's do the next one. Let's see, who's my next victim here? Let's see somebody. Mr. Brian, Mr. Rodriguez. Okay. How about you doing April 24th? All right, April 24th, the company collected $8,000 cash for commissions earned. Ooh. The company collected $8,000 cash for commissions earned.
Okay, so it would fall under revenue, right? 8,000. So 8,000 cash would be, would it be credit?
Remember, we're receiving cash here.
Yeah. So it's revenue. So okay, so it would be debit.
Is that a question or is it is that an answer? You go,
I'm
debit?
confused. So the thing is, so I see that. So all the entries they have cash is always the outcome. So I
Well,
see
not
that
every time, not all the time, but
except for the capital, right? So when it's up
yeah.
top.
All right. So yeah, so we're receiving it says here, it says the company collected $8,000 cash for commissions earned. So you had the accounts right. You just got to put them. Remember, when we receive cash, it's a debit. When we spend cash, it's a credit. So what are we getting here?
So 8,000 cash, so it's on credit, and then okay. I mean, sorry, debit, sorry.
There you go.
So debit.
$8,000, and what would we credit?
Revenue. So
Well, what is it saying? Oh, you don't have it. You don't have it. It
no,
says in the
sorry.
chart of accounts, commissions earned. That would be revenue.
Yeah,
It's called commissions earned. Ah, okay. $8,000. So we received cash and we provided a service, a commission. All right. So let's post this now to, there's cash again. You're right, Brian. Cash is a heavy duty item. Let's put the $8,000 on the debit side of cash. And now let's create a new equity account. And it's going to be called commissions earned, and it's revenue. Commissions earned. And that's going to be on the 24th. And it's going to be a credit. That's the posting of $8,000. So now we posted this credit to the commissions earned ledger account 8,000, and there's the debit sitting over in cash. See how that worked?
Yeah, so it's the input, and then it's whatever the output is on credit. So input debit. So they inputted 8,000, and then what they get out of it, right?
I wouldn't use those words because you're going to get confused as we head into accounting weeks 5 and 6 if you use inputs and credits. Remember, if we receive cash, that's money coming into the company, that's a debit. Debits increase assets. And here's money coming in for it. The other side of the equation, we received revenue. We've provided revenue. Money is coming into the company in the source of revenue. Credit, equity.
Okay.
Debit cash, credit equity. Debit asset, credit. Just practice, Brian, and get off your girlfriend's computer. That's what's jinxing you. You got to get your own computer. Don't, she might be a marketing person. If she's a marketing person, that your computer is jinxed. It's accounting people don't like that. So get off it as soon as possible. That's all I have to say. All right. Good job on that, Brian. Good job. Okay. Now let's do April 28th. Michelle Burns, talk to me. April 28th. We're going to do that transaction. It says the company paid, oh, here we go, another salary expense. The company paid $1,600 cash for 2 weeks' salaries earned by the employees. Michelle?
16,000 cash would be debit.
Remember we already did this transaction earlier, right here. It's 2 weeks later. We're now paying the next 2 weeks of the salary expense.
So wouldn't it be debit?
Debit what?
Cash.
I refer you to April 14th transaction. The company paid $1,600 cash for 2
Salary
weeks.
expense.
There you go. Good job. Salary expense. And Michelle, see, I'm not doing any fancy things here. I'm just typing these in the columns. So salary expense would be debited, $1,600. And what would I credit?
Cash.
Very good. Excellent. Because we're paying payroll. Employees are getting paid. Thank you. So now let's post it to the ledger. April 28th. The cash is going to go as a credit of $1,600 in the credit side. And we're going to put another transaction in the salary expense account for April 28th. $1,600 debit. Okay?
Okay.
Good job. Thank you, Michelle.
Hey, Professor, I had a quick question. Just to wrap my head around this. So if you were to present this to a customer, and what would be beneficial for like him to understand the debit and the credit side?
First of all, I don't know why in the hell you would show this to a customer. I mean, what do they care? They don't need to know this. This is the accounting transaction. If it's a customer, you should be making sure you're selling them a product that's good. And
well,
that
if you're
works.
an accountant for a company that you're monitoring their transactions and stuff, so
you're a CPA.
yeah.
Okay. Well, then, yes, you go through every here. I was a CPA at one time, Brian, and don't hold that against me. Then I had a lobotomy, and I finally got out of that profession. But so if I was the accountant for this company and I just had this transaction, if I was a CPA, I would say, okay, I see this journal entry here for $1,600. I should see two things. Show me the payroll slip or the payroll hours that you're paying this person that totals $1,600, and show me the canceled check for $1,600 on this day. So that tells me as the accountant that they did this correctly. I see the payroll information and I see the canceled check. That's what CPAs do to verify that. Does that make sense?
Yes. I don't understand the canceled check part. So what do you?
Well, when you write, Brian, do you ever write a check?
Yes, I have.
And what do you do when the check clears the bank? What is that called? It's a canceled check. It means it's come through the bank. So that's what that calls.
Okay.
So if I did this for a living for like 6 years, and as I said, then I had a lobotomy and I got the hell out of there. But I did this, and I went to a customer, or I went to my client and say, okay, show me all your payroll transactions. So they show me the journals. And then I say, okay, show me the payroll forms that show me this employee is getting paid $1,600, and then show me the check that's cleared the bank that you wrote this employee for $1,600. Okay, you did it right. Thank you.
Okay.
That's exactly what that means.
I understand.
Okay. Okay, good. Very good question, Brian. That's good. All right, I'm going to have to add some more lines here because I'm going to be running out of cache space. So let me just do that before I go any farther here.
Mr. Hassey, can I do the next one? I kind of have a question on it.
Who is this?
Janelli, sorry.
Okay, Janelli, just a sec. Let me just clean up this a little bit. Add a couple more spaces. There we go.
So, Professor Hassey, do you want us to set our next quiz up just like this, the way that you have it?
I think, well, the next quiz, you're going to be doing adjusting entries. But that would be probably pretty wise. You could do your entries just like this. You could set up the trial balance that I give you in the problem and set up the ledger. And then you're going to add more columns to it after you do the adjusting entries. Yes, you can do that this way. This would be a good template for you. Okay, hang on just for a sec. Okay, so Janelli, you want to do April 29th, correct?
Yes.
The company paid $350 cash for minor repairs to the company's computer. Ooh, that's a good one. Now, what in the chart of accounts do you see that could be minor repairs to a company's computer?
So repairs, would that be an expense account?
Exactly right.
So, okay. So then we would debit $350 to the repair and credit the $350 to cash.
Very good, but I would call that, just like it says in the chart of accounts, I would call it repairs expense. There's the account right there in the chart of accounts. And that would be for $350 debit. Very good. It's an expense. Why? Somebody has provided a service for us. We have to pay them, right? They fixed our computer. Repair expense. And we credit cash, $350. And if Brian Rodriguez was the accountant for this company, he would want to see the invoice that the company gave us for their services that totaled $350. And then he would want to see the check being written to them for $350. And then Brian's happy. Okay? Okay, Janelle, you got it?
Yes.
Good job. Very good. Joel. Hey, Joel, talk to me. How about April 30th, the first April 30th transaction? Oh, what we got? Sorry, forget it, Joel, just a sec. We got to post that to the ledger. So let's put in April 29. Posting to cash, $350 credit, okay? And then we got to create a new expense. Call it repair expense. And let's make it for April 29th. Getting Joel time to do the next question for $350.
Now I have a quick question. Would we combine all the expense accounts to do the trial balance, or would we keep them separate?
Keep them separate.
Okay.
Keep them separate. That's very important. Okay, April 30th. The company paid $750 cash for the company's telephone bill for the month. Telephone bill, $750 cash. Joel, what's the entry?
Professor Hassey,
Yes.
Joel texted me saying that he's having an emergency, an asthma attack.
Seriously?
Yeah, he said, can you tell him I'm having an asthma attack? I just need a quick moment. I said, are you sure? And he said, yeah.
He doesn't need us to do anything or help him? Okay.
Yeah.
Joel, please take it easy. Don't worry about this. Feel better, okay? So, Janelle, how about you doing this again? What's the April 30th? What would you do there?
Okay, let me pull up my book real quick. April 30th. The company paid $750 cash for the telephone bill. So that would be another expense. So would we debit $750 for the telephone bill and then credit
Why don't we call it,
$750?
again, let's call it the telephone expense.
Okay.
That's the account that's given to us in the problem, okay?
Okay.
And that's $750. And what would we credit, Janelle?
$750 cash.
Very good. Excellent. You got the hang of this.
I got the hang of this. I did. It's the adjusting that
Okay.
I want to see later.
Stay tuned for coming attractions.
Yeah.
So let's post that April 30th to cash, $750. And let's create another expense account. And call it telephone expense.
Elephant
Oops.
expense.
Oh, hang on, what happened here? There we go. Call it, see it says, if you look at the chart of accounts for 41A, we see an account called telephone expense. And that'd be April 30th, $750. Okay.
She didn't know how to eat the burrito.
Okay, one last one, April 30th. The last transaction for the month of general journal entries. I'll do this one. Nozomi, who's the owner, withdrew $1,500 cash from the company for personal use. Owner withdrawal, debit. It's not an expense, it's owner withdrawal, $1,500, and credit cash, $1,500. So finally, we put the last entry to cash for 1,500. And now we create the final equity account here. And let's call it owner withdrawal. April 30th, $1,500. Okay. We're done with that part. So we've recorded the journals, we've posted them to the ledger. Now the next step would be, let's determine the account balances in each one of these ledger accounts. Let's determine the account balances. All right, so cash has $38,000 on the debit side and $11,000 on the credit side. I'm just scrolling down those columns, and my computer tells me 38,000, and my computer tells me 11,000. So my account balance would be equals 38,000 minus 11,000. Oops. I'm just putting in the formula, and I get $27,000, and I put that in highlight. That's the cash balance at the end of this period. All right. And now let's go to the other ones. Computer equipment, just one transaction. So our account balance is $20,000. Supplies, one transaction, $1,000. Prepaid, one transaction, $2,400. Question, chat. Okay, Joel, glad you're feeling better. Thank you. Take care. Take it easy. All right, those are the account balance. Let's go to the equity and liability side. There's no liabilities, fortunately, in this problem. So we got 50,000, one transaction there. Rent expense, one transaction. Oh, we got two here. So let's total those up, equals, that's $3,200. Can do that in our head. There's that total account balance. Account balance in commissions earned, one entry. Repair expense. Telephone expense. And owner withdrawals. Okay? So now we got all the account balances. Now, here's the moment of truth. Let's put together the trial balance as of April 30. We have the account. We have whether it's a debit balance in that account or a credit balance in that account.
The balance.
All right, now we're going to list all the accounts in our ledger. Let's start with cash. Debit, 27,000. Okay, cash, 27,000. Computer equipment. Debit, 20,000. Supplies, 1,000. Prepaid insurance, 2,400. Cool. Now let's go back to the top of the ledger. We got capital, 50,000 credit. Bless you. We got rent expense debit. $1,800. We got commissions earned. That sounds like revenue. Commissions earned. And that's a credit balance of $8,000. All right. Again, I'm just going right to my ledger. Then we got repair expense, $350, debit. Telephone expense, $750, debit. And owner withdrawal, debit, $1,500. Now the moment of truth. Now the moment of truth. Let's put a line underneath this so we can total it. And now we're going to run the totals. And here's what you do for totals. Let the computer do the work. See up here where it says formulas? Formulas, you click on that and you do auto sum. Auto sum. And you hit sum. And you just start here down to there. Oops, start here down to there, and it'll sum up that column, $54,800. $54,800. I already see a problem. This is good. This is great. Now let's sum up. Well, let's make sure this is correct. Yep. Now let's sum up the credit column, but so all we need to do is just slide this over, copy it over, and it's 58,000. Uh-oh, I'm just like what Michelle was talking about earlier. My trial balance doesn't equal. I got $54,800 of debits, and I only have $58,000 of credits. I'm off 3,200 bucks. I think that's 3,200. Yeah, $3,200. Where did I go wrong? Where did I go wrong?
The cash.
In the cash, we have 38,000 compared to 11,000. That looks right.
Can I ask you a question on that?
Sure.
How did you determine it was the debit under the cash?
Because there's $38,000 of debits and only 11,000 of credits. And so what I did is I took 38,000 minus 11,000, I got $27,000. There's 27,000 more dollars debits than credits. That's the account balance.
You think it's in the salary?
Is it in the salary expense?
All right, let's see the salary expense.
It's on the debit when it should be on the credit side.
Isn't an expense a credit? It's not. Remember, an expense is a credit. Revenue is credit, expense are debits, right?
Oh, okay.
So let's
I
see,
had it
did I put it this? You know what I did? I don't see salary. I don't see salary expense here. I left it out. What a dummy. All right. And this happens. Sometimes you have all these accounts listed and I skipped over this one. See that? I went from cap rent expense to commissions fee earned. I skipped right over salary expense. See that? And that makes sense. I'm off $3,200 and salary expense was $3,200. So watch what I do. Let me just add this here. I'm going to insert a line. I did this because I wanted to show you this happens. So now I'm going to put in salary expense, which I've left out of my original when I first did this, and that's $3,200. There's the balance in salary expense, $3,200. Put that in there. I balance. We're cool. So I just skipped over it when I was posting these account balances to the trial balance. All right. Everybody see that? That's sometimes we make those mistakes. And as I said earlier tonight, if you just take the difference between the two and go, oh God, I skipped right over salary expense, $3,200. I got to add that to my debits. This is not a financial statement. This is just telling you that the ledger is in balance. This is not a financial statement. It is telling you that the ledger is in balance. All right. Now it's time to do the fun stuff. Quiz number 2 stuff. I have my trial balance, and now I'm going to go to point number 4 on page 154, and I'm going to record the adjusting journal entries. Okay. I'm going to have the same setup as my journal entries. All right. But the date for each one of these is going to be April 30th. It's going to be the same for every one of them, because I'm adjusting the books at the last end of the month, April 30th. It's going to be the same date for everyone. All right. So if you're on page 154, go to part 4, and it says, use the following information to journalize and post the adjusting entries for the month. So at the same time, we're going to do journal entries, but at the same time, we're also going to record and post them to the ledger as well, because we're going to have to do another trial balance after this, right? So I'll do the first one. Prepaid insurance of $133 has expired for the month. Prepaid insurance of $133 has expired. What's another word for expired? Used. Died. Debit insurance expense, $133. Credit prepaid insurance. I'm lowering the balance of the prepaid because $133 has been used in the month of April. Debit insurance expense, it now becomes an expense, credit prepaid. So let's go over to my ledger and let's put in April 30th, that adjusting entry, and post that as a credit 133. Got to remember that. And now let's open up another expense account and call it insurance expense, because this is a new account that we just have begun to use. Insurance expense, and that's $133. And now I've posted that adjustment to the prepaid and to the insurance expense account. Transaction number B. Anybody want to attempt this? Ashley, Danelle, how about you doing this, young lady?
Oh,
How about
I'm so
April
bad at
30th?
this.
I'm sorry?
I said I'm so bad at this part. I'm a little confused. Part B.
At the end of the month, $600 of office supplies are still available.
Okay.
Well, how many office supplies did we buy? We bought $1,000 back in April, and now they're telling us only 600 are still available. What happened to the other 400? Go.
They were used, so would that be a credit?
A credit to what?
Office supplies.
Exactly right. Supplies, credit.
And then would it be $400 in?
No. We bought 1,000. Now they say we have 400 that have yet to be used. How much have we used?
You used the 400?
Very good. So credit 400 to supply.
Hi, sorry, my dog just grabbed my piece of pizza, so I have to get this out of his mouth. Oh, Andy,
You know, this is something that I learned in graduate school in accounting. Pizza and dogs do not mix when you're doing accounting.
Well, yeah, we just got a puppy and trying to balance the two dogs.
Whose idea was to get a puppy during accounting? Was it yours idea or somebody else's?
I was boyfriend instigator. Yeah, I instigated it for sure. Though.
And so now you're taking care of the animal, and he's ruining your accounting.
Yeah.
What's your boyfriend's name?
Oh, boyfriend's in the class. His name's Nolan.
All right, Nolan.
Nolan's having issues with his.
Nolan, I'm having
Wi-Fi.
issues. We're going to have to talk about this in our one-on-one meeting, Nolan.
Mm-hmm.
The dog, pizza.
It's a mess.
You're ruining Ashley's life.
Yeah. Thank you. He has my back. All
right, so let's call that supplies expense.
I saw my dog pick up the pizza.
What kind of
I was
pizza
like,
is it?
I
Pepperoni?
can't. No, it's from this little place called Gino's, and it's like supreme, basically supreme, but with just a bunch of different types of meat and
Okay,
veggies.
Ashley, now
It's
turn
really
off your
good.
mic. We've had about enough of this. All right?
Okay.
It's time to turn off the mic and get back to the boyfriend. All right, and deal with
All
it.
right, I'm
All
gonna
right,
clean
you're
this
done.
up.
You're done. Ashley, you're done
Thank
for the
you.
evening.
I
Quiet,
appreciate
please.
it.
Just be quiet. Okay. But Ashley was correct before the dog ruined the Gino's pizza. We originally purchased $1,000 supplies right here. Remember here, this entry right here? We bought $1,000 of supplies. Now they tell us in the adjusting information that there's $600 of supplies still available. So that means we used $400 of it. So now we're going to adjust the supplies account to make it balance $600. And we've used supplies, so supplies expense, see, you see supplies expense right there in the chart of accounts, debit and credit supply. So let's post that April 30th. We're going to credit supplies, 400. See, when we do that, the account balance is now going to be $600, matching what we have available. Cool. And then we're going to create another expense account, they're building, and call it supplies expense, or office supplies expense, doesn't matter, $400 debit. Okay, so now we've posted that. Cool. Transaction C. Who have we heard from tonight that this could really be a deal breaker? Who have we not heard from tonight? Lisa Barlow. Lisa, transaction C of the adjusting entries, Lisa. Talk to me. We have this month's depreciation on the computer equipment is $500. This month's depreciation on the computer equipment is $500. Talk to me, Lisa. Lisa, you got to turn on your microphone. Want me to do that for you? I will. All right, I'm now reading Lisa's lips. And Lisa says, Mr. Hassey, you're full of beans. Shut up. I don't want to do this problem. I can read lips, Lisa. So even though your mic's not on, I can read lips. So Lisa, I'll do this for you. Okay, Lisa, you watch me. Remember, we talked about this last week. This is depreciation. We're expensing the equipment over time. So notice if you look at our accounts, we have a depreciation expense account for the computer equipment, and we have accumulated depreciation on the computer equipment. Ah, the plot.
Where's that information at?
It's on page 154, right in front of your eyes there, Blanca. Right in the middle of the page, there's the chart of accounts of the company.
It's in a green box on the page 154.
It gives us the depreciation amount?
No, it gives you the account.
I know.
They give you the depreciation amount in letter C, $500. Debit, depreciation, expense.
Yeah, but the computer's worth $20,000 when it was purchased.
Yeah, but we're depreciating $500 at the end of April.
How do we do that? That's what I'm asking.
Well, in chapter 7 of our textbook, we'll learn how to come up with that $500. Here, I'm just giving it to you because I want you to try to learn the journal entry to show that.
Okay, so we don't have to do that math on the depreciation over time.
No, you'll do that in chapter 7.
Okay, got it.
Okay. $500 and credit accumulated. Depreciation, $500. This is an asset account with a credit balance.
That just means you've used $500 worth of computer?
Exactly right.
Okay.
You've lowered the value of the computer equipment because you have used it for 1 month.
Makes
Very
sense.
good, Brian. So now let's set up another asset general ledger account and call it accumulated depreciation. And this
Can
is
I
April.
ask, why it wouldn't go under equipment?
You're going to keep it separate. Remember, one of our principles of accounting from chapter 1, Janelli, was you record everything at cost and it stays on the books at cost, especially with an asset. So we purchased equipment for $20,000. Now we're going to show in a separate account that what we've depreciated on it through this period of time, and in this case it's $500. Okay, this account will grow every year or every month as we depreciate it. So you're showing what you paid for the equipment. This is what you've depreciated on the equipment.
Yeah.
I
And
see.
then, okay, then we set up another expense account and call it depreciation expense. And that will have $500. So we're creating an asset to show the reduction over time of the equipment of depreciation, and we're showing in the month of April that part of that is an expense in the month of April, not in the month of May, but in the month of April, $500. Transaction D. Employees earned $420 of unpaid, unrecorded salaries at month end. In other words, they've earned $420, but you haven't paid them yet. You owe them the money. Let's take a look at our chart of accounts. Oh, I see salaries payable. Salaries payable in the chart of accounts. So employees have earned $400. They provided $420 of services. Debit salaries expense. $400 and $420, and it remains unpaid. We're going to pay it probably next month. Salaries payable. We owe the money, a liability account. Our first liability account. Hooray! So salary expense is now going to be created in our general ledger. And that's going to have a debit of $420 on April 30th. And then we're going to create a new account, a liability account called salaries payable. And that's $420 credit on April 30th.
I have a quick question. If a company offered commissions to their employees, would that be separate than salaries?
Probably, yes. They
Okay.
would have like the salary expense, or the salaries would be for their negotiated contract or their hours worked.
Okay.
And then the commissions would be extra over that. So you want to keep those separate so you know how much you're paying them in salary and how much you're paying them in commission. So you would keep that separate. It's still an expense account though.
Okay, very good.
Sounds like you have those issues, Aubrey, at your employer.
Oh no, it's just
Okay.
all kinds of things just come up in my head. So
And then we have the final adjusting entry. The company earned $1,750 of commissions that are not yet billed at the month end. Ooh. The company earned $1,750 in commissions and have not yet billed at month end. Jessica Murray, what's going on here? Commissions earned and they've been not yet billed. They owe you the money. What is this transaction, Jessica Murray. You let your hair down, so that's why I called on you again. The rubber bands are no longer in the hair, and you frees up your mind to do this question.
Yeah, I have a headache. From
Join
the
the club.
rubber band, not from you.
Oh, yeah, liar. All right.
Okay, let me see here.
Commissions fee earned unpaid. They owe you the money.
So it would be commissions earned. Why am I not finding the amount?
It
thought I wrote it
says
down.
$1,750.
Okay. Commissions earned and credit 1,750.
Very good. What's the debit? You've provided a service and it's unpaid.
1,750.
Yeah, but what's the account?
Oh, where does unpaid or services unpaid? Or oh, that's not in here.
Starts with an R.
Oh, what are you watching?
Repairs expense?
Accounts receivable.
Yeah. Does not start
Accounts
with an R then.
receivable. They owe you the money. You've provided the service, so they got to pay you.
Okay.
So at the end of April, they owe you the money. All right. So we got to create another asset account for this entry. Call it accounts receivable.
Mr. Hassey, it wouldn't be commissions receivable?
Is there commissions receivable there? I don't see that in the chart of accounts.
No.
Oh, I see. Okay, that makes sense.
Okay. Some companies might have that, but in this particular company, we follow by the accounts they tell us. Okay. So accounts receivable will be debited $1,750. And now we have one last posting to commissions fees earned. There it is right there. April 30. Another $1,750 credited to commissions fee earned. So now we've posted these adjusting entries. So let's figure out our new account balances. Cash didn't change. Computer equipment didn't change. Prepaid insurance has changed. $2,400 on the debit side, less $133 on the credit side. $2,267 is our new prepaid balance. Accumulated depreciation, one entry, $500 credit. Accounts receivable, one entry, $1,750. Now we now have more commissions fee earned. We can do that in our head. $97.50 is the new commissions fee earned balance at the end of the month after that adjustment. Rental expense, telephone expense, owner withdrawal, insurance expense, there's that. Supply expense, there's that. Depreciation expense, salary expense, and salaries payable. Now we can do the adjusted trial balance. All right, here we go now. The adjusted trial balance. After we make the adjusting entries, let's list all the accounts again. And let's start at the beginning. Cash, $27,000. That didn't change. Computer equipment, $20,000. Oops, cash, $27,000. Get that out of there. Cash, $27,000. There it is. Computer equipment, $20,000. Doesn't change. What's next in our ledger? Supplies. We forgot to do that balance. The supplies account now is $1,000 less the $400 credit. So that balance now is $600. See, these things happen. $600 balance in supplies.
You put it on the wrong spot.
I did? Why?
Yep.
There's $600 more on the debit side than the credit side, right? Is that what you mean?
Well, you see how above cash you have it underneath.
There you go. Okay. All right. Supplies, $600. Prepaid insurance, $22.67. Cool. Accumulated depreciation credit, $500. $500. And accounts receivable, $17.50.
So you're doing everything all over again, regardless if you add it or not.
Yeah, because you're going to have new accounts you're going to be adding to this list.
All right. Okay.
So capital, $50,000. Credit. Rent expense, $1,800. Salary expense, we won't forget this one this time. Salary expense, $3,200. Commissions earned, now it's $97.50. Credit. Commissions earned, $97.50. Repair expense, $350. I know this is monotonous, but this is good we do this so you can see this. Debit, $350. Telephone expense, $750.
Debit.
I hear an echo.
Mm-hmm.
Owner withdrawal, $1,500.
Debit.
Insurance expense, $133. Debit. Supplies expense, $400.
Debit.
400. We're almost done. Depreciation expense, $500. This is when you appreciate computers, when you have to do this day in and day out. Have somebody else total up all these things. Salary expense, $420. And finally, salaries payable, credit, $420. We owe the money. You know, guys, sorry about that. I just realized I did a goof. I have salary expense up here for $3,200. Jessica, you should have yelled at me. I have salary expense up here for $3,200. Then I added another salaries expense down here. I should have just added the $420 up to this column, okay? The $420 should be up here, April 30th. Thank you.
I would have yelled at you. I just don't want to interrupt you.
Yeah, you're too nice.
I
So we'll make that $420. All right. So that brings our balance now to $3,620. Yeah, there we go. Okay, there we go. Sorry about that. So this can be wiped out. This is not, should not be there. I just did it twice. Okay. Now the moment of truth. We've now gone through and we've done the journal entries. We've now posted them to the ledger, and now we've done and posted them to the adjusted trial balance. And let's determine the sum. Formulas, auto sum, and go from cash all the way down. 63,870.
Nope.
We're off again. Son of a gun. 60,670.
You're off by 3,000.
We're off by
3,000.
we're off by $3,200.
Oh yeah.
You know why? We listed it twice here.
Salaries, expense, yeah.
Yeah. All right, say adios to that.
Bye.
See, these things happen. Here we go. And now we balance. Yay! $60,670. All right. We just did quiz 2, question 1. The only thing that remains is preparing the financial statements. What would be the income statement for this company? It would be all these accounts here. Revenue less expenses. Okay?
See,
Except for
that's
the
why-
owner withdrawal. All right? So if I would do the income statement here, income statement, for the period ended April 30th. All right. Revenue. Commissions earned. $97.50. Any other income? No. Expenses. Rent. $1,800. Repairs.
350.
$350. Telephone.
750.
$750. Insurance.
133.
$133. Owner withdrawal is not an expense. It's not included here. Supplies. $400. Depreciation.
Okay.
$500. And finally, salaries expense. Salaries, $36.20. Okay. Let's total up the expenses. Auto sum. All right. And let's determine the net income. Equals revenue minus the total expenses. $2,197. That's the net income for the period of April. They made a profit.
Wow.
All right. Notice I kept it fairly simple, nothing fancy, but this is the name of the statement for the period of time. I listed the revenue, I listed the expenses, there's our profit. Okay?
Question.
Yes.
So quiz 2, that's the second part?
Excuse me?
Is that quiz 2 second part right there?
No, that's quiz 2, part 1. The final part of that part 1 is do the financials.
Got it. Okay.
Let's do the statement of equity. Period ended April 30. Beginning balance April 1. 0. Owner investment. What's the owner investment account? $50,000. Net income.
2197.
2197. And finally, less owner withdrawal.
100.
We'll put that as a minus. Minus owner withdrawal, $1,500. What's the balance in our equity account at the end of this period?
50.
Since I put this in as a negative, let's just sum it.
50,000.
$50,697. Cool. And now let's do the balance sheet. This is one hell of a template here. Damn, Professor Hasse. Balance sheet. As of April 30. Note it's not for the period, is as of April 30. Assets. Cash.
27,000.
27,000. Computer equipment.
2267.
20,000. Less accumulated depreciation.
500.
So our balance in the equipment total is $19,500. The cost of the equipment less what we've depreciated up to this time, so it's $19,500. Next asset, supplies, $600. Cool. Next asset, prepaid insurance.
$2267.
Next asset,
That's it.
accounts receivable. People owe us some money. $1,750. Oops. Let's put that over here. $1,750. Total assets. The sum of this column. $51,017. All right. Make that look a little pretty. Liabilities.
420.
Salaries payable. 420. Equity. We get it right from our owner's equity statement. All we have to do is put $50,697. The moment of truth. Total liabilities,
In balance.
equity, sum, year-end balance. This, we've just completed quiz number 2, question 1. All right. We've done the adjusted journal entries. We've posted them to the ledger and completed the adjusted trial balance, which now drives our income statement, our owner's equity statement, and we know the whole sucker balances because the assets equals the liabilities plus the equity. Ladies and gentlemen, madame and messieurs, you are now accountants, if you can do that. There you go. I'm going to save that, but there's one more thing left. Quiz number 2, question number 2, close the books. Closing journal entries. And the adjusted trial balance gives you the data to do the closing entries, because you only close the temporary accounts. What are temporary accounts? Revenues and expenses and owner's withdrawal. So you go down through your adjusted trial balance. Mr. Hassey now wants me to close the books. All right. What accounts do I have to close? Expense, revenue, expense, owner withdrawal, insurance expense, expense. I'll highlight those. Those are all the temporary accounts of April. Notice all these other accounts will continue on. So let's now do the closing journal entries. Again, it's, nice spelling, Mr. Hassey. This is going to be one popular recorded lecture. So let's get this here. We'll bring these down. Okay. First of all, let's close the owner's withdrawal account. Here it is right here. We close the owner's withdrawal account directly to the capital account. So if I want to close this account, I want to credit it. That will zero it out. And I want to put the debit into the capital account because I'm summarizing the withdrawal of the owner. So the first closing entry and the date will always be April 30th again. So I'm going to close the owner account by debiting capital. $1,500 and crediting owner withdrawal. $1,500. So now, just for the sake of doing this, let's post these to the general ledger. So we have the capital account up here, April 30. We're now going to put in that owner withdrawal of $1,500 on the debit side.
April 30. You put first.
High maintenance.
Sure am.
And then go to the owner withdrawal account and put in April 30. The $1,500 on the credit side, this account now is zero. It's closed. Cool. All right, now let's close the revenue account. The revenue accounts are closed by debiting them. And where do you put the credit? Into an account called income summary. Income summary. And I'll show you why as this process goes. So we debit commissions earned. $97.50. And we credit income summary, which is a new account. I'm losing my concentration here. Credit income summary. Golly, have another drink. There we go. 97.50. So now let's post that to the general ledger. So we just closed the commissions earned account. There it is right there. On April 30, we're going to debit the account 97.50. That account now is zero. And we're now going to open up one last account called income summary that summarizes the income statement accounts. April 30th, we just credited 97.50 to the income summary account by this entry here. We're summarizing the revenue. Now let's close all the expense accounts. To close the expense accounts, you credit them. All right. Rent expense. Well, let's first of all, let's do the debit. The debit would go into income summary, the total amount of the expenses. Well, we already know what the total amount of the expenses because we just did the income statement. It's 7,553. Debit income summary, 7,553. That's the total of all the expenses. Rent, 1,800. Repairs, 350. We're almost done, guys. I want you to see this though, so you can do it. Telephone, 750. Credit, well, because we're now zeroing out, we're closing accounts so we can start the next accounting period with a clean slate. What are going to be our expenses next period? Insurance expense, 133.
Credit.
Supplies, 400. Depreciation,
500.
and finally salaries,
3620.
3620. Now let's just make sure that totals 7533, and it does. So now we've closed out the expense accounts. So let's post those to the ledger, making sure those are all closed now. Rent expense was credited. That account now is closed. Salary expense, 36. Yes?
April 30th, please.
Closed. Salary expense.
Thank you.
$36.20 credit. Repair expense. Credit. Closed. Telephone expense.
750 close.
Credit. Closed. Insurance expense.
133.
Credit. Closed. Supplies expense. Closed. Depreciation expense. Closed. Salary expense. Closed. And then finally, there's the April 30th, 5733, which is the total, 7553, excuse me, 7553.
You need to add a line.
Anka,
Why?
can you stop interrupting him? It's really distracting.
But
Please stop.
he's putting it on the wrong spot, and
That's
it's
fine. He'll correct it.
I don't think he will.
7553.
Not the
All right.
teacher, dude.
Okay. And now let's determine our ending balances. All right. The capital account. Remember, we have income summary here, so we got to we'll do one last closing entry. We have to zero out the income summary, which will be our net income, 2197. So the last last closing entry would be to debit income summary by my net income, 2197, and credit capital. The capital balance goes up by our profits of the company. So now we post, the last posting to the general ledger would be putting in the capital account 2197 as a credit, that's the net income, and close out the income summary account by zeroing it out by moving that 2197 to the capital account. So now if you look at my ledger, the only accounts that are still live are cash, capital. Let's do the capital balance. There's our capital balance. 5697. All the expense accounts are now zero. The asset accounts have all their balances. All withdrawals, expenses, revenue are all zero. The income summary is zero. The only thing that keeps on living is the salaries payable account, wherever that went to. Salaries payable. So now the last thing you do for every accounting cycle is now prepare one last trial balance called the post-closing trial balance. And this is a listing of all the accounts that remain after you zeroed out withdrawal, revenue, and expense. All right. It'll be all these accounts right here. So you can just copy those down. Let's make sure we have our headings. April 30. And let's not forget salaries payable. Get rid of that yellow. And now we also want to make sure we update the capital account. Remember the capital account, we had to update that balance with the owner withdrawal and the net income closing out to 50,697. So let's update that here. 50,697. And now let's total up and make sure we've now officially closed the books. Auto sum. Whew. We are done. The accounting cycle, chapters 1 through 4, has now been completed. We have now recorded the original entries. We've posted them to a ledger. We did a trial balance. We did the adjusting entries. We did a trial balance. We did our financial statements. And we closed the books, all the temporary accounts, revenue, expense, and owner's withdrawal through the account called income summary. And this is what we carry forward. So on May 1st, the next day, you start it all over again with these accounts beginning. As you have revenue and expenses in May, you would create those, but they've already been closed for April. Now you begin the next accounting cycle. Ladies and gentlemen, Madame and Messieurs, I leave you tonight with what your quiz number 2 will be. I'll be giving you an adjusted trial balance. Excuse me, I'll be giving you a trial balance. Then you'll be doing the adjusting entries per the problem, doing adjusted trial balance, and then the income statement, statement of owner's equity, and the balance sheet. That's number 1. Number 2, I give you the adjusted trial balance and you close the books. You do the closing entries and you do a post-closing trial balance. That's question number 2. And here's what it looks like. We go to our account, our backboard, bring up quizzes and examinations, and there's quiz number 2. There it is right there. I give you a PDF and a Word doc format just to download them and do the problem. But remember what I said earlier, you're going to do these transactions in a spreadsheet format, exactly like we just did this evening. And here's what it looks like. Where is it? Hang on, gotta get it. And after you download those files, this is what it looks like. Part 1, worth 60 points. Here's the unadjusted trial balance of that company. And then I give you A through I adjusting entries. Your job is to prepare the adjusting entries, prepare the adjusting trial balance, and then do the financial statements. Prepare the adjusting entries, do the adjusted trial balance, and then do those 3 statements, exactly what we just did in problem 4.1. And the second part is, I give you the adjusted trial balance of a company, prepare the necessary closing entries, and prepare a post-closing trial balance. So close whatever accounts on this statement and prepare a post-closing trial balance for the company. I'm not asking you to do any posting to a general ledger, but you have these accounts, so as you do these adjusting entries, you got to make sure you know you adjust the accounts appropriately to do the adjusted trial balance. Now, if you want to create a general ledger to keep the sanity for yourself, that's fine, but I'm not looking for a general ledger in any of these problems. Part 1, Part 2. All in spreadsheet format. So you have that to do, and then you have to sign up for professor meetings Saturday, Monday, or Tuesday of next week. Now, the good thing about this is that when you sign up for a meeting, these are all before the due date of quiz number 2. So if you have any questions or concerns, we could talk about it in those meetings. If you have any questions or concerns. But that spreadsheet that I just did, I am now going to post that spreadsheet that we just did to week number 3, and where it says completing accounting cycle, I'm going to add that spreadsheet to this folder, and you can download that spreadsheet as a template. Oop. You can download, hang on, I just lost it. You can download that spreadsheet as your template to do quiz number 2. Whew, I didn't think I'd make it to 9 o'clock, and I did. Wow. 3 hours of unadulterated, exciting Accounting 203. And you guys have now done the accounting cycle. So here's what some of you have to do. Some of you should go back through and look at the results of your quiz for the first 3 parts. And then you look at the template that the problem we did tonight on 4-1A. Look at that to do quiz number 2 as your template. Put all that together and you're on your way to a lifelong peace in your life. Because if the trial balance, post-closing trial balance balances, you will have forever peace. Wow. And let's see. Oh, the people are still here. I thought they'd be heading for the exits when we got about to the post-closing trial balance. All right, there we go. Elijah, why don't you send me an email, Elijah, about it when you want to meet and go over quiz number 1, and we'll set a date and time, okay?
All right, sounds good.
All right, you send me an email when you're available.
All right.
In addition, this will be in addition to our own little meeting for the 10-15 minutes, because I think your review will take longer than 10 and 15 minutes.
Yeah, well, I got all my answers. I mean, questions already answered when we went through it today.
Oh, okay. All right.
Yeah.
Very good. Anybody else have any questions or concerns? Blanca, I think you did a good job tonight. Thank you for keeping me honest.
Okay. I do have a question in regards to the meetings that we have. Like
Yes.
I have on Monday, you
Mhm.
have a specific time. So if we are in need of a long discussion,
You're going to have to make another time.
okay, so I should be able to zoom in at 1:20 because I have to take my break from work.
All you have to do is click on the link, put in the password, and I'll be there
Okay.
in all my splendor.
Okay.
This was a good class tonight. I know you guys probably don't think so because right now your heads are probably about ready to explode. But now you have the basis by which you can go forward and start taking this in, and you're going to practice it in quiz number 2. I wish Ashley all the best of luck with that damn dog.
Thank you.
And I wish all of you a good weekend, and I look forward to seeing you all before our next class in our little meeting sessions over the weekend and into next week. So sign up, do that. Again, as I said earlier, if you can't make any of those days or times, just send me an email and we'll work something out. It's 9 o'clock and I need a cocktail. So I'm going to sign off. If anybody wants to stay on a little bit later, longer, and I'll wait until everybody all signs off in case anybody has any last minute things to ask me about. Have a great evening. The recording of this session will be put up tomorrow afternoon. I'm playing golf tomorrow morning, so I won't be able to get it until the afternoon. Golf tomorrow. Tee it up. Blanca, excuse me?
Will you be posting the spreadsheet we worked on earlier?
I'm going to be doing that exactly as I conclude our session tonight. They'll be going up this evening.
Okay, thank
Nothing better than at 3 o'clock this morning is looking over that template. I can't think of anything more exciting.
you. I'm going running.
No, you're going to study. Forget the running. Or you're going to run over to Ashley's house and take her dog away from her.
No, poor thing.
Okay.
No, I love my dog.
So I've now seen at least 4 different hairstyles on Jessica tonight. So she's done a good job, and now she looks even better. So Jessica, good job. You guys all have good sense of humor. I appreciate that. We'll see you all in the next few days, okay? Adios,
Thanks.
everybody.
Thank you. Enjoy your cocktail.
Definitely, I will. Definitely. Maybe 2.
Good. Bye.
Bye. Get out, please. Leave.
Bye.
See you, Elijah. Good job tonight, Michelle. Good job. We did a lot.
I actually have a couple questions on like the income statement and then the closing journal entries. Can we go over that during our like scheduled time?
We can do that, Elijah. No problem.
Perfect. Thank you.
Okay.
Have a good night.
See ya.
Professor Hesser, I do have a question too.
Sure.
Concerning the quiz that we took,
Mhm.
I'm only seeing 3.
Because you got the other 2 right. I only give you back the ones that you made a mistake on.
Oh, wow.
So
Okay.
the other 2 you did exactly right.
But still, my grade was pretty low.
Yeah, because you messed up on the journals.
Well, that's what I was screaming about. I couldn't get that.
Well, you knew when I post the solutions tomorrow, you can
Yeah.
review it, or you and I can review it individually at another time, okay?
Okay. Thank
Don't worry
you so
about that.
much.
All
Okay.
right, Michelle.
Mhm.
See you later. Take care.
Mhm. Bye.
Andrew, you have a question?
You know what? I do. I have kind of a dumb question.
That's not a dumb question. Please go ahead.
Remember week 1, you actually asked us to say what's up to you on the forum.
Yes.
Well, I didn't do that, so I'm trying to respond to you as far as reserving a time, and I don't know how to do that. Okay, so I'm at the meetings, and I see people's entries, but I don't know how to post anything.
Okay, hang on. Let me bring that up, okay?
Okay.
So you mean the discussion forum in week 1? No, I don't understand. What's your question again, Andrew?
Okay, class discussion forum, professor meetings. How do I send a message?
You just go up here to create forum, click on create forum, and then you can just say, like here, you hit create forum, and now you just type in Andrew request, and then down here you type out the day and time that you want, and then hit submit, and then I will respond to you.
Okay, so I don't have a create forum button.
Yeah, you don't?
I didn't see one.
Right here, discussion.
So okay, professor, since this is an online course, so I'm looking at the same page you're looking at, but there's no create forum button.
All right, hang on.
Here, I'll show you. I don't know if you can see that.
I can't. So all you do, all right, here's what your screen looks like. Great, I have it now on the screen. This is what your screen looks like. All you do is click on the file. See this file folder here?
Got it.
And now you'll see create thread.
Create thread.
And that's where you do it.
Okay, sorry about that.
No, that's how would you know that if I didn't go over it? So so hit create thread, and then you can type in your stuff, and then hit submit, and then we're all set.
Okay, I got it. Thank you. I appreciate it.
All right, Andrew. Take care.
All right, I'll see you Monday afternoon.
All right. Bye-bye.
Bye.